What's up, guys? Kyle here with High Stakes Trading. I'm going to show you something that is called the HST model that I trade. Used to be IFVG trader, but kept on getting stopped out at break even too much, and just I didn't really like the little wins. So I kind of took something from somebody else I learned, Al Brooks, and then ICT. And kind of put it all together and call it the HST model. So this is what it is. So on Tuesday the 14th, we obviously had a big news bar right here that came out, and we pulled back to discount, right? So we know that there's not really a data low wick down here, so it's not really a good pull on liquidity. The pull on liquidity is still higher, still up here at the London high. Look, we have relative equal highs, all that liquidity, right? We've been in an uptrend, pulled back, looking like we wanted to go up. So until this gets hit, I'm still going to be looking for longs, technically. So we have a pullback down to discount. The big thing about this model is it's just like IFVG's, played the same way. We have our liquidity sweep. We want a liquidity sweep, and the big thing is we also want some type of delivery, right? So we got both those. We have a liquidity sweep, we have our delivery from a fair value gap, and we have a pull on liquidity that is bullish, right? So we're looking for longs. So the HST model, we just technically made an H1 right here, so that is what would trigger me in. So let's do that. Let's buy here. We'll grab 10. So you can trade this different ways, right? You can trade it to liquidity points, you know, here, here, and here if you want. It doesn't really matter. But kind of find the best way to trade it. I'll show you. It's usually just going for fib levels, right? So I know my stop's going to be below the low. My entry's right there above the high, and 1R, 2R, 3R. So I usually like to go into 1R, and then I'll usually trim half depending on where the liquidity is. So 1R in this case hits before my liquidity hits, so I'm going to take off at 1R. So let's roll this down. And I got tagged at 1R right there. So the cool thing about this model, right, and where I was trading IFVGs, like if you go look at what a lot of the IFVG traders traded on 114, they got in right here, right? You got to move down to discount. You got the IFVG, you're sweeping liquidity, all that good stuff, right? They would have got in right there, dang near almost where I'm past half R and at my 1Rs, where they're getting in. So where I'm taking profits is where IFVG traders are getting in, right? That always kept on being my problem, right? If I took an IFVG trade, I'm risking 52, somewhere possibly down here, I don't know, maybe 20 points, and my first take profit is like, 13 points. So it's just like, so R to R is just tough. This really, really, really works well, especially if you come join my Discord and come learn how I trade it. On YouTube, I'm going to give you a really basic version, but this is the gist of it. So we got 1R, so we can go sell, probably just going to sell 6 right there in case this pulls back. Obviously this is kind of bearish structure, so let's roll the stop to break even, and let's roll. Okay, so IFVG traders would have lost, I'm sure. Yep, there you go. See, they would have lost. I made money, they lost money, right? That's the thing that I kept seeing over and over again, right? So let's go back. So IFVG traders got stopped out. Okay, right there. So I could have held onto this, could have took it at 1R, kept my stop safe, but I don't want to get ran over, and that's not the right way to trade, and it's not going to make you money in the long term. So let's continue this out. See what happens. Okay, well, we make an H2 and we did not sweep liquidity, so this is a second signal. Could be if you got some big balls. Good signal bar. So if I do that, I'll just go in for my half position, right? Put my stop there, and then my TP would be at the 2R this time, right? Maybe we'll kind of go to, no, we're going to do this. Try to make it a 1-to-1 trade. Mathematic reasons, right? So, boom. Tags my 2R. Yeah. Would have stopped me out. Very close. If you would have ran the 3, would have got hit, right? But not a bad little model, right? If you take that 43 up to 2R, no, you're getting 30-some plus points in pre-market. You can't beat that. Can't beat that at all, right? So this is called the HST model. It's what I created. It's what I trade every day in my Discord. If you'd like to learn more, feel free to join the Discord. Thanks, guys.